Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago talking natural gas futures. EIA released their inventory numbers for natural gas, driving the price quite a bit lower, although we did have a little bit smaller of a draw than was expected. 183 billion cubic feet draw versus an expectation of 189 billion cubic feet. Again, most of that driven by weather. It's nowhere near last week's 339 billion cubic foot record, but it is still a draw on supplies, and we've got, with that little bit less than expected draw, we've got a bit of a sell-off coming in through natural gas. Now, prices are lower, down over 4% on their lows, coming back up to recover almost half of that in toward the end of the day. But the prices are lower for how much longer? You know, we're looking at a situation where not only is the seasonality trying to push natural gas prices below $3, and it's not really working so far. At this point in the month of January, we're generally quite a bit lower, 1% to 2% lower than where we are right now. But when you look at overall what's happening with the natural gas inventories, as I mentioned a second ago, that puts us in a position where coal becomes a lot more desirable down the road. So what happens when natural gas has this high price is it ends up beating its own self down lower. What I mean by that is the natural gas fired power plants that power air conditioners in the summer get less demand, and coal becomes the fuel of choice. There are places where that transition is fairly simple, although it's not just vanilla across the globe. Now, we are below the 5-year average again on inventories, well below. We're 362 billion cubic feet below the 5-year average on natural gas stockpiles. We're also 368 billion cubic feet below this time last year. Again, adding to the narrative that coal might be the fuel of choice as we move in toward the summer. Obviously, it's January, the seasonality has a lot more time, but if that narrative starts to take hold, you could see natural gas prices briefly spike and then fall in toward the summer, completely missing that summer demand that's usually driven by prices that are much lower than where we are now and stockpiles that are much higher than where we are now. This is Bob Iaccino talking natural gas futures from the CME Group trading floor in Chicago.